Hello, ladies and gentlemen. I hope you're fine. Wherever you are, I am the ACCA tutor. To some of you, it's morning, others evening, and others afternoon. All right. So I just want to say hello, guys, to you. I am the ACCA tutor, Jeremy Timkulu, and I am proceeding with the lecture series dedicated to absorption, marginal, job, batch, service, and process costing. All right, this is our week 4 according to the Transcar Consulting Services teaching schedule. All right, it has been a very torrid week so far. We have got 3 videos already which have been prepared in this lecture series, which I want you guys to just watch and learn from. Okay, in this particular video, I hope that we are going to rest our case on process costing. I mean the last bits. All right. So far we have covered in our third video. We have covered process costing, dealing with these aspects where we talked of process costing where there are no loss, when no normal losses exist, when no normal losses exist. We then considered a situation when there was normal loss, and then a situation when there was normal loss with scrap value, and then a situation when there were abnormal losses and when there were gains, abnormal gains. All right. So far, I hope you guys have been well treated. Now, I just want to increase the pace with regards to the rigor involved. All right. We now want to consider a situation now where there is work in progress. Okay. And we are saying work in progress is a situation where during the process of manufacturing something, all right, we reached period end, or we reached year end before those products or before those units have become finished products. So they were just work which was undergoing the production process. So technically that work is called work in progress. Okay, but work in progress is actually needs to be quantified in finished product terms. All right, so there is a technique that is used to quantify, okay, or to value, all right, to value that work in progress in terms of finished product. So we call that process equivalent unit. Okay, so we call we refer to those units as equivalent complete units or equivalent units. They are equivalent in terms of their proportion or their completion stage to finished goods. All right. For example, if we have got 100 units of 100 units of work in progress, okay, which are undergoing some process, but in terms of completion they are 30% complete, which means 70% more work is still required. We call these, in finished goods terms, we say we have got 100 multiplied by 30%. So we have got 30 units of finished goods. We only have got 30 units of finished goods. So that's the equivalent units principle. Okay, so you need to refer to the notes which we have supplied you to ensure that you understand what we mean by an equivalent unit. Okay, so now when we have work in progress as part of our costing, we then have to decide which method of costing are we using. So we have got two methods of costing inventories. We have got the FIFO and the weighted average cost method. Okay, the weighted average cost method. Weighted average cost method. Okay. Weighted average cost method or approach, the FIFO approach or the weighted average cost method. So this method are obviously going to give us different values in terms of the cost of the closing stock or the inventories. All right, but these are the two methods we are going to look at in our costing so far. All right, so we are going to start with an example where we'll be valuing the cost per unit of the product using the FIFO. Right, so we are going to start with the FIFO. So let us go straight to our example and see what would be going on. Right, this is our example, ladies and gentlemen. We've got Maxio PLC, which incurred the following costs in its process in January. Okay, let me try to find a more clearer pen. Okay, so there were 1,000 units of materials, all right, which were bought in January, and they costed $5,000, labor $2,760, overheads $3,440. During the month, 800 units were finished and transferred to the next process. All right, the remaining 200 units were work in progress and were complete as follows: materials 100% complete. All right, which means there was actually no need for us to incur extra work or extra costs with regards to materials. They were done. So on this particular inventory, the materials are enough. But in terms of the labor, it means 60% had done the work, but we still need about 40% of labor to complete the work. And then in terms of overheads, only 30% were met, but we need about 70% more cost on labor. All right, so we are required to calculate the cost per unit. That's our first task. And then the value of finished output or finished work in progress. All right, and then prepare the process account. Okay, so in this case there is no open work in progress, so we need not have to worry about whether we are using the FIFO or the LIFO, or the ACCA, the weighted average cost method. All right, so we just have to work in a more flexible way, okay, without some hassle. So we just have to be a bit systematic though in terms of our presentation, because in some examinations you will be required to present your information in a clear manner so that the markers won't struggle to determine what you were trying to do. Okay, so I think I need a black pen. Let us go to a clean sheet, and then we just have a table where we can say the materials, right? Materials heads, okay, and this table is actually very useful to us throughout our computation. Then once you do this, you then have to just paste in the cost information as given in the question. These are our costs. So that's materials, they costed $5,000. Labor, that's 2,760, and the overhead 3,440. Okay, now we also have to determine the equivalent cost of the finished goods as well as the equivalent cost. Okay, all right, not necessarily cost but units. All right, let me just say equivalent units. All right, so we have got finished goods to worry about. We also have got work in progress to worry about. So in terms of finished goods, we are told clearly that during the month 800 units were produced. So we simply have to slot in this figure the 800 units. Okay, 800 units were produced, and then 200 units were work in progress. So we simply have to come here and say there were 800 units which were produced or which were finished. All right, and it means if these goods were finished or were complete, it means they were complete in terms of materials, in terms of labor, in terms of overheads. They were just complete. Okay, then what about in terms of work in progress? We have to be guided by the examiner. Okay, the work in progress was complete as follows: materials 100%, labor 60%, and overhead 30%. But we know that the work in progress in terms of units, they were 200. Okay, so we are guided there. So in terms of materials were 100% complete. So there were full 200 units in terms of materials. But in terms of labor, we are told that labor was 60% complete. So we say 60% of 200, this becomes 120 units. And then overheads were 30% complete. Okay, 30% complete. So which means 30% of 200, it means that we had 60 units in terms of overhead. All right, now we add up. It means that in terms of materials, we have got 1,000 units. In terms of labor, we have got 920 units. In terms of overheads, we have got 860. All right, so what is the cost per unit? The cost per unit, cost per unit, cost per unit. For materials, we are saying the cost was this one, and then the number of units were these ones. So we just say $5,000 divided by 1,000. This means that the cost per unit was $5. And for labor, we just do the same. That's 2,760 or over 920, which means the cost per unit is $3. Let us verify with our calculators. Then for overheads, we simply do the same, 3,440 over 860. Then we get our $4. Once we do this, we then have to determine the total cost per unit. This means we have got, we just have to add up the costs per unit in each category. So it means that that's $5 plus $3 plus $4, which means the cost per unit is equal to $12. We are done with the requirement A. Now let's determine the value of finished output and the work in progress. Okay. Now, for this bit, we also have to be a bit strategic, because the first thing that is to come into our mind is to determine the value of finished output. Okay, which we are told that there were 800 units which were complete, multiplied by the cost per unit, which we have just determined as $12. Okay, this one. So it means that we have got the total value of 9,600. Okay, then we proceed to the work in progress. Okay, our work in progress has to be quantified. Has to be valued in terms of the components involved. We've got materials. Okay, materials, which were 200 units, right? 200 units, materials, right? Comprised of 200 units, all right, which were said to be 100% complete. At how much per unit? The per unit value of material is this one, $5. Okay, so it means that we have got $1,000. We proceed to labor. Okay, the labor we also have to base on our 200 units as usual, but we have to be guided by the percentage completion. The percentage completion for labor, as you can see, it was 60%. Okay, 60%. And the labor cost per unit, go to the labor category, was $3. Okay, so this should actually mean that we must be having $360. We go to overheads. All right, the overheads are also based on 200 units multiplied by the percentage completion of 30% multiplied by the labor cost per unit, which was $4. Okay, and we have to determine 240. Then we add them up. We should arrive at that is 0, that's 4, 6, um, 0, 0, 5, 6, and then so that's 1.6. Okay, this should be the value of finished output. Okay, the value of finished output and work in progress. Okay, the finished output was this one, and the work in progress was this one. All right, what about the part C? The part C requires us to do the process account. The process account is just the usual process account we saw in the previous videos. Okay, we've got the units column, got the dollar. Also, I've got the unit column on this side. Let us make this one a double line. So, units dollar. All right. So, on the debit side, as usual, we input our costs incurred during the month. Okay, that's materials. We are told that the question is saying that we input 1000 units of materials. My machine is freezing now. Look, the machine is freezing. Oh my god, the machine is freezing, and when the machine is freezing, there is a problem. Okay, we input 1000 units, as you can see there. So we just have to slot that figure, and we are told from the question that the materials were costing 5,000, labor 2.760, and overhead 3.440. So we just have to slot this figure 5,000, and then labor 2.760, and then I forgot 3440 for the overheads. So we are not told of any abnormal gain whatsoever, so we just have to underline them. Okay, and then on this side now we have to be also guided accordingly. All right, we have to slot in these figures as we have computed them. So the transfer to finished goods, transfer to finished goods FG, we are told that 800 units were transferred, and their cost was this one, as we have just determined, 9,600. And then the value of work in progress, that is going to be an opening balance to the coming period, is then going to be the balancing figure, but we have already computed it here, so do not worry. We know that there are 200 units, so that's 200. So, and the value is 1.6, as you can see there. All right, so these sides should balance obviously, so that's 1000, and if we add up this column, we have to get our 11,200. So obviously this column should add up to that value. Then if it balances, then you have done your job very well. But this case now, there was no opening inventory. In terms of work in progress, so we need not to worry about whether we should be applying the first in, first out, or the weighted average approach. Okay, but in our next example, we have to determine whether we adopt the first in, first out technique, or we are using the weighted average, because there will be some opening work in progress, which is actually the more realistic example in the business world. All right, it's actually very rare that we finish the accounting period with all the inventories in production completed to finished goods. All right, that is not a realistic assumption. What is real is that normally the period end is reached before, with some items within the process not yet complete. That is the real phenomena on the ground. Okay, so let us proceed to this particular example so that we know where we are going. The following costs were incurred by Optima in July. Materials, 30,000 units. They were costing 24,900. Labor and overheads, $20,075. All right. At the beginning of July, there were 15,000 units of work in progress valued as follows. Materials, 100% complete, $9,000. Labor and overheads, 40% complete, $1,250. At the end of July, there were 5,000 units of work in progress. They were 100% complete for materials and 50% complete for labor and overheads. Calculate how many units were completed during July. Calculate the cost per unit. Calculate the finished items and the closing work in progress. Prepare a process account. Not use the FIFO approach and assume there's been no losses. Okay, that's what has been asked for by the examiners. So how do we determine the part A? The part A should not be a worry. We just have to do the reasoning here. Okay, but the reasoning should actually be a bit structured. For part A, we can just determine units completed. Let us have some form of T account to determine what is actually going on. We have got work in progress brought forward. The work in progress brought forward from the previous month was 15,000. Okay, so that's 15,000. All right. We are also told that 30,000 were actually started. Okay, so they were started in this particular month in July, so 30,000. So in total, we are having how much? 45,000 units. All right, but at the end, we are told that there were 5,000 units of work in progress at the end of the month. So work in progress 5,000. So obviously the goods which were started and finished, the goods which were finished rather in July, should be the balancing figure, which is 40,000. Okay, that's the actual information. I mean the information which we can actually assert with utmost confidence. All right, that from the available evidence, the items which were finished in July were 40,000. We do not know that, whether those 40,000 were the items which were started and finished in July, because they actually can't be 40,000, because we already know that of these 40,000 there were some 15,000 items which were brought forward from the previous month. So 40,000 does not mean that it represents the items which were started and finished in July. We should also do some working to determine if how many of those items were actually started and finished in July. That's, I think, the working we need to do for part B, because it is saying that calculates the cost per unit. So we need to determine how many units which were started and finished in July. So part B, units started and finished in July. Okay, for us to determine this, we then have to say this should be equal to the items which were finished. So units finished less work in progress brought forward. All right, so this actually leads us to, we determine that from this, our working here, our initial working, the goods which were finished in July were 40,000. So 40,000 units minus the work in progress brought forward of 15,000. So obviously the units which were started and finished in July were 25,000 units. Okay, now let's now have to come up with a table as usual, as we did in our first example. Okay, we just have to tabulate our things to be more systematic. So that's materials and labor and overheads. Remember, these have been combined this time. All right, so the costs in July for these guys, the labor, the materials, we are told they were 24,900, the labor 20,075. So 24,900 and 27,500. Then we proceed to the equivalent units. The equivalent units are also based on the items which are available. So we start with the the work in progress to complete. Okay, work in progress to complete or to work on. Okay, the work in progress to work in. All right, we were given 15,000 units from previous period. All right, according to the question, there were 15,000 units of work in progress, and they were valued as follows: 100% complete materials, $9,000. So obviously we do not need to work on materials. Okay, so we come here and we say in terms of materials, all right, the amount of work required is 0%. All right, and that means that there is 0 work to do. But in terms of labor and overheads, we are told explicitly that they were 40% complete, so the amount of work required is 60%. You guys have to put 60% effort on labor and overhead. All right, so 60% of how much? Of 15. remember the units were 15,000. All right, so 60% of 15, that's a 9,000 units. All right, 9,000 units of labor and overheads. All right, and the items which were started and finished. Excuse me. Items which were started and finished in July, these were, we determined them here. Okay, there were 25,000 units. Okay, okay, so these ones in their entirety, they needed work. Okay, the full 25,000 needed some work. All right, and then the work in progress. Okay, at the end of the period. All right, work in progress at carried forward CF. Let me just try to rub that. Somebody might think that that's an H. No, that's not an H. It's the carried forward. Okay, all right, we are told from the question these were 5,000 units. Okay, and according to the question, these units were 100% complete for materials and 50% complete for labor. So that's, we just have to slot the figures as they are. Okay, so that's 5,000 because they are 100% complete. But this is a percentage, 100% complete, and then here we are talking of 50% complete in terms of labor and overhead. All right, so that's 50% of 5,000, that's 2,500. Okay, once we do this, we then have to sum them up. The units here, we are talking of 30,000 units. Here we are talking of 9,000 plus 25, that's 34, plus 2,500, that's 36,500. Okay, so given this, the cost per unit becomes cost per unit in each category. For this one, we say the total cost was, the cost are these ones, 24,900 divided by 30,000 units. All right, and we have to get our, let me determine my calculator here, that's 0.83. Okay, and then here that's $20,075 divided by 36,500. This gives us cost per unit of 0.55. Okay, so the total cost per unit is equal to 0.83 plus 0.55. This should, let me just try to add up, $38. So we are done with the requirement part B. Then we move on to part C. Okay, the value of finished items and closing work in progress. All right, so part C. In part C, we then have to determine how many units were produced, were finished in the month of July. All right, how many units were actually finished? We determined in our first, there were 40,000. So unit output completed in July, we are talking of 40,000 units. All right, that was our output, which was completed that month. All right, the work in progress brought forward, okay, was 15,000 units. How do we value this work in progress? Okay, we know, according to the question, the work in progress was comprising of these two figures. Okay, materials were costing $9,000, and then labor and overheads $1,250. All right, so in terms of costing, we just assume that the cost of work in progress was actually going to be $9,000 plus 1,250. So we were going to have, let us put the dollar sign there, 10,250. Okay, and what about the cost of finishing this work in progress? All right, in terms of the labor. All right, in terms of the labor. All right, because we are told that the labor was 40% complete initially. So what about the cost of finishing this labor? We need to worry about that cost again, because it is very essential here. If we do not know about it, then we are stuck. All right, we are stuck. Remember, these costs have been incurred already, okay, but there is more work to be done on the 60%, so we need to factor them here. All right, so we call that one the cost of finishing. The cost of finishing, this one should be based on the 15,000 units. Okay, the 15,000 units. All right, and the 60% effort required. All right, multiply by the cost for, remember, this is labor and overhead. Okay, so the overhead cost per unit, according to our computation, was 55 cents. So we just have to say multiply by 55 cents. Okay, and we should get the value which we want of 4,950. Okay, and we then have to get the total. All right, in the exam, normally you do not require these totals, just have to proceed with the computation, but for the purpose of learning, so that you see the flow. All right, if we add them, these two figures, you just have to come to 15,200. all right, and then we need to add the value of goods which were started and finished. Okay, goods started and finished. the items which were started and finished, we determined already that these were just 25 here. Okay, there were 25,000. All right, and these are valued at the total cost unit, that is multiplied by this figure $38. All right, so we get that's 25,000 multiplied by $38, so that's 34,500. Okay, once we get that figure, we are almost there with our computation. All right, we're almost there with our computation, so we just have to add this figure, that's 00794, so that's 49,700. Okay, and we then have to okay, this should actually be the cost of the 40,000 completed units. Okay, because the question was requiring us to value the finished items. So the value of the completed units has been given. All right, that's the value of the completed units, 49,700. All right, so there were this much, 40,000. Okay, all right, and if we add up, all right, the 15,000 units which were brought forward, and then the goods which were started and finished, 25,000, so they come to 40,000. So we are right. Okay, so what about the cost of work in progress? Let us determine this value because it is also required by the examiner. All right, the work in progress. For the work in progress, we have got this is the work in progress at the end of the period. All right, the closing work in progress. That's the work in progress at the end of the period. So work in progress at the end, or closing work in progress. All right, we are told that these are 5,000 units. So we then have to value them in terms of the categories involved. We've got materials. These ones are said to be 100% complete, so that's 5,000 multiplied by 100%, multiplied by the cost per unit of materials. From our computation, materials are costing per unit, they are costing 83 cents. Okay, they're costing 83 cents. So if we use a calculator, let me just try to punch this figure. 5,000 multiplied by 100%. 100% is just 1, is equivalent to 1. Okay, so 5,000 multiplied by 1 multiplied by 0.83, and we get 4150. We proceed to labor and overheads. Labor and overheads are also based on the units of closing work in progress. That's 5,000 multiplied by the rate completion stage. Okay, and that's the units of labor was how much? We determined that the unit of labor and overhead was 55 cents. Okay, using the calculator, 5,000 multiplied by 50% multiplied by 0.55, we get 1375. You then have to add them up. You should get your 5 5 okay, sorry, 25. So that's 5525. 5525, that's the value of closing work in progress. Then we can safely do our process account. Okay, we've got our units, our dollar, units, dollar. Okay, and we know that there has been some work in progress. The work in progress brought forward of 15,000. Remember that. Okay, and the value uh, the value was 9,000 plus 1,250, and that was 10,250. Okay, and then we bought some materials during the month, and these were 30,000 units, and the cost of these 30,000 units was, you still remember, 24,000. All right, it was 24,900. We then incurred labor and overheads. They were matched. All right, and the total cost for these was 20,075. Okay, then I have to total up. All right, just have to total up 45,000. We add up there, that's 10,250 plus 24,900 plus 20,000 and 75. That's 55,225. Okay, what about the items which were transferred out? Items which were transferred out. Ladies and gentlemen, we have already done these workings, so it's a matter of just picking the figures. All right, so transferred out, we know that the items which were finished were 40,000 units, and the cost was 49,700. So 40,000 units, 49,700. Okay, you can also use the balancing figure approach, but the figures are there. All right, and then the work in progress, CD or carried forward was 5,000 units at 5,525. We add them up, they should come to 45,000 and 55,225. That is how, ladies and gentlemen, we were supposed to have attacked the first part of all the parts of this example. All right. Now, um, there's some pitfalls with this method, okay, which we need to know. We are not actually consistent with um, the way business is done. All right. Okay. Okay, ladies and gentlemen. Um, I've highlighted that this approach has got its weaknesses. Okay, and the major one is that um, the values of finished goods are are different depending on whether it is a work in progress or not. Okay, depending on whether they are opening work in progress or not. Okay, for example, as you have noticed here, um, the opening work in progress according to this question, okay, sorry, my pen is misbehaving. The opening work in progress, opening work in progress was 15,000 units, okay, 15,000 units, and they were costing um, 9,000 plus 1,250, which means 10,250. So the cost per unit here was 10,250 divided by 15,000, which was how much? 10,000. Let me check. 10,250 divided by 15,000. So you can see that they were 0.68 per unit. Okay, but if we go to our computation so far, you can see that the values, let me just try to determine the value of completed units were being valued at if you still remember, let us go to it's only that my computer is now beginning to to sticking. All right, we determined that the cost per unit was $38 there. All right, when the cost per unit in terms of opening work in progress, it was 68 cents. All right, so there are some pricing differences always, and let us also try to determine the cost per unit of closing work in progress. You can see that here the work in progress of 5,000 units, which was the closing work in progress, was costing, let me use a different pen, was sorry, your movement is distracting this. It was costing here the total cost was 5,525, but units were 5,000. So you can see that the cost per unit for this closing work in progress is actually 5,525 divided by 5,000 units. So you can see that the cost per unit here is now $1. 11 cents. So there are so many differences in terms of pricing. Okay, so many prices are different at every stage, which is something that is confusing and could be subject to manipulation by accounting managers. All right, so it is better to have a method that usually smooths things out. All right, and the weighted average approach endeavors to smoothening the pricing. Okay, it tries by all means to ensure that the prices are smoothed out. A uniform price is usually advocated for. All right, so let us try to get through this example and we rest our case. Okay, we've got this information, okay, which is actually is what we've just seen in the FIFO example. So we are just using the same information, but we are going to adopt the weighted average approach. So without wasting much of the time, you know that every detail here is just the same as we have seen in the FIFO example. So some of the figures we just have to slot in because we have already worked them out in the FIFO example. So let us just proceed to answer the requirements. The first requirement is that calculate how many units were completed during July. Of course, this one is very important working. We need that one. Like I have indicated already, we will just have to say finished goods. Finished goods. Okay, we had work in progress brought forward of 15,000 items or 15,000 units, and then we are told that 30,000 were added. So we started 30,000. So in total we had 45,000, and then we are also told that 5,000 were work in progress. Closing work in progress of 5,000 units, and we know that the both sides of the T account should be balanced. So obviously the goods which were completed finished were 40,000, which is the balancing figure. So we are done with that one, and then we need to calculate the cost per unit, and this one is a bit challenging, but we just have to be as composed as ever. So we need a larger space for this part. For part B, let me have a black pen. Okay, that's materials, and then we had labor and overheads merged. Okay, and we have to consider the costs of these guys. We have got work in progress brought forward. That's the cost of the 15,000 units which were brought forward from the previous month, and we are told that there were 9,000 and 1,250. So we just have to slot in those figures. $1,250. Okay, and then the costs which were incurred for in July for the 30,000 units which were added. Okay, let me just say 30,000 units. For the 30,000 units which were added or started, we are told that they were 24,000 and 20,075. So we just have to slot in those figures. 24,900 and 20,000 Okay, once we do that, we then have to add them up, come to 33,900, and then here they come to 21,325. Okay, this calculator is also starting to stick, to have stick keys. All right, then we move on to the equivalent units. The equivalent units, ladies and gentlemen, are also based on the work in progress and the goods which were started and finished. Although that stage we did it, we've got the work in progress brought forward of 15,000. Okay. We know that these were brought forward. Okay. So in terms of the weighted average approach, okay, we just have to know that we need to work on 15,000 units. All right, so we just have to slot the figures as they were from the previous period. All right, just wait a minute, you understand what we are talking about. So we inherited 15,000 units from the previous period. Okay, so we just have to slot them as they are. All right, then there were items which were started and finished, items which were started and finished. All right, the items which were started and finished are based on the assumption that, all right, from our computation, our first computation here, we determined that the items which were finished in July were 40,000. However, these 40,000 included work in progress of 15,000. All right, so to determine the units which were actually started and finished in July, we then have to remove the 15,000 from 40. So we have to know that these were started and in July. So we just take that figure. It's just the same as the previous figure. We did compute that figure, if you still remember. So that's 25,000. Okay, 25,000. Then the items which were finished in July should actually be 40,000. Okay. All right. What about the work that is to be started for the coming period, for the future period? I mean, the closing work in progress. All right. The work in progress carried forward. This was 5,000 units. Remember. All right, and we are told that for materials they were complete. All right, they were 100% in terms of materials, but in terms of labor there was 50% to be done. Okay, and the labor, so that's 50% multiplied by 5,000, that's at 2,500. Okay, that's 2,500. So we then have to add up and we get our 45,000. Okay, here that's for 2,500. So we do the same. The cost per unit, the cost per unit is equal to, for materials, that remember let me just try to use the red pen. The cost is here. These are the costs and these are the units. So that's for materials, that's 33,900 divided by 45,000. And if we use our calculators, let me try to punch in this figure. That's a 0.75. We go to the labor and overheads column. That's 21,325 divided by 42,500, and we should get something like 21,325 divided by 42,000. That's a 0.5. Okay, once we get this, we then have to say, as we did before, the total cost per unit would be 0.75 plus 0.50, which would become $0.25. Okay, so the value of finished goods would be determined by, okay, that's part C, the value of finished items. Value of finished items. Okay, we know that the finished items were 40,000 in July, multiplied by the cost per item, as we have just determined the total cost per item. So we are having that's 50,000. Okay, and what about the value of work in progress? The work in progress, remember, it's 5,000 units. The work in progress, closing work in progress, closing work in progress. Okay, that's 5,000 units, and it is based on materials. The materials are 100% complete, so that's 5,000 multiplied by 100% multiplied by 0.75. This gives us 3750. Okay, labor and overheads. Okay, 5,000 multiplied by 50% complete. Okay, multiplied by 0.50, because that's their cost. These are the costs we are referring to, ladies and gentlemen. Okay, so that's, we say, labor and overheads computation is giving me 1250. So let us add them up. Obviously we are going to get a 5,000. So we are done with the requirement for part C. Then part D. The part D is saying let us draw up a continuing from where we left. Okay, continuing from where we left. Let us draw up a process account. All right, as usual, a process account has got a debit and credit, and we have got the units column, dollar, units, dollar. Okay, and we are told that there was opening work in progress brought forward of 15,000 units, and in total we had 9,000 cost of materials and 1,250 for labor and overheads, that which gave a total of 10,250. Okay, and then we had materials, okay, 30,000. All right, and these were costing, from information in the question, they were costing 24,900, and labor and overheads were 20,075. So let us slot in those figures: 24,900 and 20,075 for labor and overheads. Okay, and we just have to total up this side. That's 45,000. Okay, and that figure, that's that's column, we are having 10,250 plus 24,900 plus 20,075. That's 55,225. You go to this other side, just slot in these figures. In the exam, you mustn't fail to just slot in these figures to ensure that both sides are equal. All right, that one is a terrible mistake. All right, then transfer out, transfer to finished goods, FG. All right, we have already computed that the finished goods were these ones, so that's 40,000 units at $25. That is 50,000. And then the work in progress, carried forward, we are told that 5,000 units were remaining in stock. All right, and their value was 5,000 as well. Okay, their value was 5,000. So if you add them up, you can see that obviously there has been some difference. All right, and the difference of about because if you add them up, it should be 55,000. So the difference is actually a very small difference, which could be due to some rounding in our figures. So you need not to worry about that. Okay, but there has been some attempt to ensure that the values which have been incorporated in the valuation of closing inventory and valuation of work in progress and valuation of finished good items were just the same. Okay, we will be just using the same value uh, uh, throughout. Okay, and you might be worried and say, why are you saying the values are just the same? All right, let me just try to take you somewhere. Okay, ladies and gentlemen, yeah, the issue of smoothing with regards to the weighted average cost is actually emanating from this fact that when we were doing our costing, let me just try to use a red pen. Okay, when we were doing our costing here, you still remember that we incorporated the prices, the costs for the work in progress, this work in progress, okay, as well as for the items which were purchased. All right, and we added up the cost for the materials. It was this one plus this one, and we get this total. All right, and this is the same total which we use to value the cost of each unit of material against the quantities. Okay, so this is the total cost divided by the total units of material. Similarly, on the labor and overheads, we determine the work in progress cost and the purchases cost, or the cost incurred during the month. Okay, as you can see there, and we get this total, and this is the same total which we made matched against the quantities, okay, of 42,500, and we get these values. These are in a way average values. Alright, they are in a way average values because they include the opening values and the purchases which have been made, or the costs which have been made during the month. They come together and they are then matched with the units which have been produced that month. So that's the weighting we are talking about. So it's in another way, we are smoothing out the cost, or we are averaging out. Okay, I think you have been helped in that area. So let us now finalize our case with the issue of joint product costing. Joint product costing. All right, but for the purpose of video management, we just have to dedicate that part to to a small video, and then we rest the case. So please just hang on, just stay around, just stay tuned to the next video. Okay, just wait for the next video, or just move to the next video. All right, I hope with that I have done my part, and I am signing out. Thank you very much.